Hey everyone, it's Gene W here from the Linesman. Welcome back to our YouTube channel. This is going to be the first video in the beginner education playlist, which will be taking you from knowing nothing about all of the stuff that we do in terms of trading to knowing everything about what we do in terms of trading. So, first of all, you'd want to head over to our Twitter and then join our Discord right here. Once you're in there and verified yourself, you'll be able to see the official links channel. Now, we are affiliated with Mexi, Bybit, and BingX in terms of exchanges. For Mexi, I really like their product in terms of the wide variety of coins they have on offer and tokens to trade. It's one of the best out there. Bybit, this is my main exchange that I use for trading every single day, simply because of how clean the UI is, how no, it doesn't lag at all. There's low spread in my experience, and BingX is the final one if you're looking for forex slash indices. Um, that's where we trade them. So if you'd like to support us, feel free to click on one of these links and open your account there. So for today's video, I'll just use Bybit for an example. It'll take you over here to create an account. You'll just follow the steps directed, and then you need your email. It'll ask you to verify it, and then once you're in, you'll be able to deposit crypto with one of these two, whether you want to buy with fiat or send from, for example, your MetaMask wallet. I'll just hop over here for a second. I'm already logged in on our. This is actually the challenge account for the $500 to $2,000 challenge we have running in the Discord. So once you're logged into Bybit, this is just the main page over here. You want to head over to derivatives. If the stable coin you hold is Tether USDT, you want to click on USDT perpetual. Whereas if it's USDC, here's the pubs for USDC. So just click on there. I'm going to be using USDT as that's the one that we trade with. Now, initially, um, it may seem like this is confusing and there's a lot going on, but I'm here to help with that and I'm here to break it down for you. So first of all, your chart might be on standard or it might be on depth. Not sure why you'd be trading on that, but I would 100% recommend using TradingView. Um, Stay tuned for a future video on the channel where we'll go over how to actually use TradingView down in the app, in the actual TradingView app. 100% one of the best charting softwares out there and the one that we use every single day to execute in the market. But for now, you just want to focus on having your thing on TradingView. It's the cleanest one and it's the easiest to use. In the top here, you can change your time frame depending on what you're trading, whether you're swing trading, whether you're scalp trading. For example, right now I'm on Bitcoin. If you hover over there, you can then choose what coin you'd like to trade. You can filter it by trending, new, metaverse, DeFi, all of the categories, and find which token you'd like to trade. So now that that's out of the way, you don't really need to worry about this too much. It does seem a bit like flashy and in your face, but this is simply the order book, which is showing you live as the price trades. What are the buy orders? What price are they coming in at? How much is the quantity in Bitcoin? Because we're trading Bitcoin here, that the orders actually are, and the total quantity of, for example, so of sells are the red ones and buys are the green ones. So that's just informative if you not really something you need to pay attention to too much. But yeah, so that's the order book part. Then we'll begin over here. So standard and strategy, I don't really use this at all. I'd 100% recommend sticking to standard. There's no really need for strategy, especially as a beginner. So once you're on standard, coming down here, we have the margin mode. Now, very important here to know whether you're trading on isolated or cross margin. There are a few slight differences that can mess you up a lot if you don't know what you're doing. So I'm just going to give a quick overview of those. So for example, if I was long Bitcoin and short Luna 2, for example, then I would 100% recommend using isolated margin, because if you're on cross margin, you if both of your positions are going in the same way, you can benefit more. But if they're going opposite each other, it can really mess up your account and your risk. Additionally, if you're using cross margin, you can your entire account balance can get liquidated, as if the price is close to your stop loss or your liquidation price, it'll take margin out of your equity in order to keep adding to that position. Same as if you have multiple open. So the benefits of cross margin really, in my opinion, don't outweigh the drawbacks. Especially as a beginner, there's not really any need to be using cross margin. If you're trading just one coin, it doesn't matter. But sorry about that. But I would recommend just having it on isolated, so you don't accidentally end up trading cross without knowing. The next thing is, once you've selected your margin mode, leverage. Now, leverage is probably one of the most misunderstood topics in the entirety of trading as a whole, never mind crypto trading. So we're going to have to go into a lot more detail about leverage and how to use it and how it can be beneficial for you in a future video. Actually, it should be the next video on our channel for this beginner education will be on risk management, calculating position size, calculating margin to leverage ratios, and all depending on your risk. So stay tuned for that. But for now, um, I'll give a quick overview. For example, if I wanted to be in a $1,000 long position on BTC, and as you can see, I've got $492 in this account right now. I can either go 10x leverage and use $100 of mine and 10 times leverage that to get to my $1,000 position size, or I can go 5x leverage and I can use $200 of these, etc., etc. So it's just about the combination, the ratio of leverage to margin that you'd like to use in order to get to your desired position size, because your position size determines how much risk it is, but for how much you're risking in the market if your stop loss gets hit. So stay tuned for the future video on that, but for now, that's pretty much it. Jeez, it's going crazy right now. Damn. Anyways, now that we've gone over those, it's time to get into the actual types of orders. So, first of all, we have limit order, and with limit orders, you are saying that the price is currently trading at right now is not where I want to get into the market. I want to be in the trade, for example, I want to get into a long down here at 22,800. It's crazy volatile right now, so I want to be careful here. But 22,800, you put your price in there, and now, okay, while I'm in this example, I'll just go over these. Order by value and order by quantity. You can either have a position size denominated in Bitcoin, for example, like 0.1, 0.4, 1 Bitcoin, 3 Bitcoin, depending on how much money you've got, or you can use value. For the risk management calculations we have in the next video, you'll see why we like to use value. It's just a lot easier, and it doesn't really matter what coin you're trading. It's consistent across all of them. So for this example, I'll just use order by value, and let's say I want to have a $1,000 position size. I'm currently on 19x leverage, so it's saying that it's only going that there's the quantity in Bitcoin 0.043, and the cost for me is only going to be $53, as in order to get to a 1,000 USDT value position, because I am leveraging. Now, once you've got these two in, you can, if you're longing, you can enter your take profit and enter your stop loss. So for example, let's say we wanted to long down here. Oh no, we said 22,800, right? Yeah. So let's say my take profit is going to be 23,150. That's where I want to get out of the market in profit. 23,150, and my stop loss is going to be 22,759. Before I enter the trade, you can already tell me how much profit I would make if my take profit got hit, and it can tell me how much loss I'd be in if my stop loss got hit. So that's very valuable in terms of risk calculations, etc., risk management. But stay tuned for the next video if that's all unfamiliar concepts to you, alien terms. It won't be, and that's something you're gonna have to be very familiar with. So just to show you how this works, I'll just enter into this. It gives you a nice little summary of your estimated liquidation price, which you always need to make sure your stop loss is above that because there's no need to go into liquidation. Stop losses are the best risk management tool out there, and I highly recommend using them. Um, there we go. So once you confirm that, you can see down here, you've now got an active order. It's sitting right here at the price you entered in for where you'd like to get filled. So now only on the condition that the Bitcoin price goes down to this exact level, will you actually be in the market. There's no guarantee that it gets to here. You can have limit orders sitting all the way down here that do nothing to the price because it's all the way up here and don't get filled. They're just sitting there. They'll sit there forever, so make sure you cancel any limits that don't because this is a perpetual contract. It doesn't expire. But you can just cancel this because we're done going over limit for now. I'll just cancel that one, and the other one I'd like to go through is market. As a beginner, it's not really important to worry about conditional. It's more market and limit that we go through, but in a future video we'll outline conditional. Um, so market, as you can probably understand from the name, it's trying to say, apologies, it's trying to say that I accept whatever the price is trading at right now, and that is the level that I want to get in at. So as you can see in times like this where it's volatile, sometimes you might get in like a little bit higher or a little bit lower. That's called positive slippage. When it's if you're longing and it gets you in lower than the price is right now, it's called positive slippage. If it gets you in higher, it's called negative slippage. It's just about how the liquidity works and how the orders actually were able to be executed for how long the price is trading at that level, at your desired level. But for now, let's just say I wanted to get into a $1,000 long right now. I'll just go buy long, confirm, and now you can see if you go over to positions, this is what it looks like when you're in a position in the market. So currently I am in a loss, unrealized P&L of 34 cents, and these are from the previous takes of recording this video that um, I've made mistakes in and had to re-record, but here we are. We're getting there. It gives you a nice summary of everything, your liquidation price, how much margin you have in there, and you can set your take profit and stop loss exact same as how it was with the limit order over there, and they'll come up. Let me just show you that right now. Let's say my stop loss was 22,850. Wouldn't want it to go under there if I'm long. 850. It tells you how much loss you're going to be in, and let's say my take profit is 23,200. 23,200 tells you how much profit you're going to be in as well. So I just click confirm there, and now you've got it on the chart there. So when you're watching the position, you just want to make sure it stays away from this green line and heads straight towards that green line. But that's pretty much how it looks like when you're in a position. There's not really much else to do to manage it. Besides yeah, this is what I wanted to go over. Getting out of the position. Now, similar to how we had a limit order and a market order to get into a position, you can either close your position by limiting out or marketing out. When you market, you're going to be paying a bit more in fees than if you limit, because limit you're not guaranteed to get filled, and market you are guaranteed to get out at whatever price it is. So you got to pay for that security, I would say. Um, yeah, you got to pay for that security in order to allow you the safety of getting in whenever you want to, and not the risk of um, not getting into the market, which obviously you run the risk of if you're using a limit order. But I'll just go ahead and market out of this one 100%. Tells me how much fees I'm going to pay, 38 cents, including of the closing fees of 59 cents. Whoa. Wait, let's just click confirm here, and then if you go to close P&L, it'll tell you how much you actually lost. So it was adding those two together. It was $1.27 that I just lost from this. This is from the previous takes, as I just mentioned before. Um, Pretty much that's pretty much it for now. I believe wanted to keep this video short and simple. Hopefully this assists in your understanding of how to actually use the derivatives portion of your exchange. You don't really need to worry about post only, reduce only, good till cancelled. This is just your equity and your available balance. So your equity is the total value of your USDT that you hold. Your available balance is, so for example, in the previous position I just had, I used $50 of my equity. So my available balance would then be 450 and not 490. It doesn't mean you've lost the money because it's in an active position, but you can't use that money to open another position when it's already been used in one. Uh, yeah, so I believe that's pretty much it for this video. Thank you for your time. Hopefully this was beneficial, and I'll catch you in the next one. Cheers.